So the kids can go to the same school, the same kindergarten, the same place where they are, to go to the same job that they are at, because the car just killed it.
Hi, everyone. Thank you so much for joining us today on Divorce Right, HR Solutions for Divorce in the Workplace. My name is Vicki Townsend, and I'm the president and founder of Divorce Right. We have a solution for the issues that divorce can cause to your employees and to your company's bottom line. And today we're going to be talking about mortgages. And why is that important in the HR perspective? Because a homeowner will stay put. A homeowner will not quit. So we're very anxious to be talking to a good friend of mine and an amazing mortgage advisor, Racheli Refael. She is with Loans for You through Fairway Independent Mortgage Corporation. And since 1995, she has been opening the doors for homeowners. After her divorce in 2010, Racheli discovered that there was a big information hole when it comes to divorce and homes. She found herself advising many people who are going through a divorce so that they could avoid mistakes that could hinder their eligibility to keep the marital home or buy a new one. Clients who came to Racheli to be approved for a home mortgage after they went through a divorce discovered many mistakes that were agreed upon in the settlements, but were not executable. Racheli helps divorcing homeowners make an informed financial decision about the secured house debt and helping the home through divorce mortgage guidance and enhancing the option to preserve home ownership eligibility. That's her number one goal after divorce. She got certified as a certified divorce specialist from the NADP and received a designation as a divorce mortgage specialist under Professor Kelly Murray and the co-founder of Divorce This House. Professor Murray holds degrees at Stanford, Phi Beta Kappa, Harvard Law, cum laude. Professor Murray is also highly regarded in the legal community. And as a divorce mortgage specialist that was trained under Professional Murray, Racheli can help the process to preserve home ownership eligibility during and after the divorce. So Racheli, thank you so much for being with us today.
Thank you so much for allowing me to share the knowledge that I gained over the last few years to help people. I call the home the temple of a family, and I would like to do whatever I can to preserve it.
Oh, that's awesome. So, I've seen you speak on this topic so many times, and you've always impressed me with the information that you've been able to impart that just makes, it seems to be common sense, right? But how does preserving home ownership help an employee maintain and keep their job?
Well, when they know that they can keep the home where they're living right now, the marital home, that will help them continue the path of where they were. They can continue in the same neighborhood. They can continue with the same job. They know what it takes them to get from and to the job. Childcare that in the area where they live. If they need to think to reinvent everything in their life, that may hinder the thing. And they might be at the spur of a moment, just quit because the pressure is so big. And not knowing if you can have the home or not have the home is a big issue for many, many, many people.
Absolutely. And I know that, income levels, that's a big thing. So how does the way an employee is paid affect their eligibility for home ownership?
That's a big one. And it depends on how the employer pays the employee. If it is 1099, that means that the employee is self-employed, even though they get the 1099. And that can affect their eligibility over the last 2 years, what they can and cannot qualify for. If they're salaried, but they're paid per hour, not an even amount each and every week or biweekly or monthly, that can affect their eligibility as well, because we are required to average what it was in the last 2 years if it's hourly. So if they made the same amount, but the income came from base salary, bonuses, overtime, other things, it does affect them to qualify, because we may not be able to use all of their income that they actually getting paid because it was not over 2 years and it's not higher from year to year. So that can affect them if they can or cannot be qualified.
What is the best of all of that? Being a salaried employee?
Salaried, yes,
salaried
absolutely
employee?
salaried, because salaried shows that it's continuous. And with a salary, I don't need to average last year and this year. I can just go by what they're paid now.
Oh, that's very interesting. So when you're working with these and you're with a firm, right? You're with Fairway. Well, what's the difference between, let's say, somebody that's at my local bank, or maybe one of these online mortgage companies? Where's that difference, so that, I feel like maybe you're more on that consulting. You come in as a consultant and an advisor. So what's the difference between you guys?
There is a huge difference. Number one, as a direct lender, we are a company that does only mortgages. We're not like a bank that maybe 3% of their business is mortgages. Mm-hmm. And the people who are working at the bank, for the most part, are not advisors. They're not consultants. They're clerks that tell you that they want a few pieces of paper, or sometimes I've seen them even giving people pre-approvals without even reviewing documentation. And then when it gets to the underwriter, you get a denial. And we want to avoid any more stress over what the people are going through the divorce time, to have more stress than what's needed. The online companies that are doing mortgages, for the most part, these are people that are right out of college. They do not have the experience that we have as advisors here at Fairway. We are a national company and can advise people and give them a roadmap to homeownership or preserving homeownership of the marital home. And that's huge. We go through the process and make sure that there are no stones unturned that could come at the end and come and bite us. So we get you pre-approved, we get you underwritten. So before you sign the dotted line that you agree with your spouse on something, let's get you approved to know that you can actually execute whatever it says.
Right, exactly. And I know that that's one of the things that you're going to be doing here today, is giving our listeners who are supervisors, HR managers, anybody with direct reports, and even C-suites that'll be listening to this. So what are some tips that you can give them to help their employees through this process when it comes to affordable housing and home ownership?
Okay. Number one is to know, are they planning to keep the home where the marital home was, or are they going to vacate it and move to another home? That's the number one. Number two, I've seen too many people that during and after a divorce, their credit went down the drain. Mine, I had over 800 and it went to the 500 because I was not keeping my eye on what was going on. And yes, it affected my ability to keep my home in a way that I needed to wait a little time to clean my credit again from things that happened during the divorce. And maintaining and watching the credit report is crucial. Another one is make sure that the employee knows what is the effect of going and opening new credit. How does it affect their ability to buy the home? There is a little rule that I teach people that for every $100 of liability on your credit report, it's $10,000 less in a price of a home. So if they have a car payment that's $500, it's somewhere around $50,000 to $60,000 less in a price of a home that they can qualify. Wow. It could kill the ability to keep the marital home so the kids can go to the same school, the same kindergarten, the same place where they are, to go to the same job that they are at, because the car just killed it.
Wow.
So we want to review all of those things before we go and sign the dotted line.
Interesting. Let me ask you a question. Are there some other things that at a corporate level I don't know, like shares of stock, um, other bonuses, things like that, that really come into play that need to be maybe handled differently, or that from an employer standpoint that they can do to assist their employees at being able to stay in the marital home.
That is the ideal situation, that one of the parties will stay in the marital home so the kids can have a continuing of the life. However, if one of the spouses have to pay alimony or child support, and they're planning to stay in the house, that's going to be reduced by their income. And because of the new law that passed a couple years ago, where the person who's paying the alimony and child support, they cannot deduct it anymore.
Right.
And the party who is receiving it has to pay taxes on it now.
Mm-hmm.
So that can change the dynamic of what we can and cannot do. If a person is getting a bonus and now that bonus need to be shared or will no longer be there, that income is gone and cannot be used, even though they had it in the past 2 years because of the pay structure. So all these things need to be handled, reviewed, discussed before.
Right. I think that the biggest lesson here is to, and I've said that even with the NADP, that oftentimes the most important person in the whole process, everything is family law attorneys, it's the mortgage expert that's going to determine, and also going through that settlement statement. Mm-hmm. I listened to some things that were on settlement statements that you've seen that made it impossible for them, and on both sides of that agreement, to be approved for a mortgage.
Yes.
This is not just anything. This is about having your employee being able to stay in their home, or to be able to buy a home in the community where they currently have a job. Because if they can't do that, that gives them every excuse or every reason to go back and maybe live with mom. Mom can take care of the kids, and I'll find a new job in another state. So the goal here is to keep a happy employee, have them being able to either be able to refinance their home, or to be able to at least be approved for a mortgage at another residence that's close to where they work, so that we can kind of maintain all of those things. Like you said, the consistency with not only with your work environment, because then you're less stressed from that, but also for your children, right? The kids get to stay in their schools. They get to stay with their friends, things, this is a hard thing on children, and particularly when children are uprooted. So the goal is to keep the children uprooted and happy, and then we can keep a happy employee engaged in the community, and living the American dream of homeownership.
Absolutely. And it is my goal and my desire to impact people to preserve the eligibility of homeownership, mm-hmm. and go into a new homeownership if that's their choice after a divorce. Some people don't want to stay at the home where
absolutely.
But at least they can stay in the neighborhood. They can stay in the area.
They can maintain their friendships. They can maintain, their social circles, as well as their business and work circles. Yeah. Racheli, thank you so much. You are always my go-to girl. Can you do me a favor? Just give everybody just your contact information on how they can, and we'll include that in the link below. But how can they get in touch with you?
My name again is Racheli Refael. You can find me on social media under Racheli Loans, the number 4, the letter U, or Loans for You, Racheli. My number is 954 Loans for You, 954-562-6748. And my team and I will be honored to help your employees preserve their home ownership. Thank you.
Thank you so much, Racheli. And for all of our listeners, thank you so much for being with us today. We have a new episode every Monday that we will bring to you information on how you can help your employees through this very, very complicated web of divorce. So thank you for being with us, and we look forward to talking to you again next week. Racheli, again, thanks so much, and have a great day. Bye for now.